Hello.
Hey, how are you?
I am okay. How are you?
Perfect.
I'm doing a little better than this guy in the picture right now.
Had a great day today.
I would tell you, we had a pretty good read today. It just felt like one side was caught, and just the slightest tip of whatever was said during the day today in the FOMC minutes or whatever the catalyst was. I think it was pretty clear this was coming.
Yeah, no, I definitely think so too. Nice read at that 200 level, 2000 level.
Yep, let's actually go right into taking a look at this. So this is the recap of the S&P 500 coming into this morning. Now, I guess one of the most interesting things about looking at this, Marion, there's very sparse pockets of anything closing week yesterday. So that in itself is a little bit of a indicator, even though there really wasn't a trend day yesterday.
Right.
Traded back and forth on both sides of the S&P, but in mass, the S&P 500 really not leaning towards the short side, but clearly at or near this resistance level. We mentioned that the 200 and the top of the, the $200 level and the 50-period moving average at the same general area there. So basically, coming into today, exactly what we just said, both numbers at the same spot. But I think this was the important thing here. They were basically short-term resistance level. It wasn't like, minor support, major support. This was really, it felt like so much like a pause. There wasn't really any selling other than like maybe one or two sectors like Dollar Tree or a couple of other ones yesterday. So this really is the big thing to me. And I've been saying this for like a week, and I know we've been discussing it. And I hate to use the word feels, don't you? Because like there's no way to quantify. What do you mean it feels? Hey, teach me how to
Right,
feel
right,
it.
exactly. It was like they took a pause in running,
Right, exactly.
to catch their breath.
So I kind of hedged it a little bit here, but I said it feels like the Bears have been trapped. And again, I've been saying it for a couple of days, so I'm not just kind of armchair quarterbacking here. But I'd be mildly surprised if we had a large volume downtrend day. And look, as soon as we started getting really light volume during in the first 90 minutes to 2 hours of the day, it was kind of obvious we weren't going to sell off unless the FOMC minutes were like something way out of the blue.
Right, right. I agree. And I think most traders were waiting for what happened. We did have, buying in quite a few, and some of them really held up. Others did sell off a little bit, like Netflix. And I think you were one of the, you warned somebody in there not to be selling. We were talking about that. And
Yeah,
that turned out to be
pull
a
that
great trade
pull that one up. Actually, we can maybe have a quick discussion about that because maybe some people who are watching the video are not necessarily in the room with us. But when we start to have consolidation type days, we switch from trading a trend to trading just a breakout, and we tend not to call direction because a consolidation could go in either direction. By its very definition, there's indecision, and you got to let that play itself out. And interestingly, we made a pretty good argument that yes, we're not calling direction, and we did end up getting this hard push down. But I think it was kind of like right around here, if I'm not mistaken.
right.
Just as the first time it broke down, we said, well, yes, we technically said we're going to let it tell us which direction it wants to go out of the breakout. However, the prior move to this consolidation was pretty strong, and we basically were saying, yes, that's technically the rule, but you can't throw out what it's done. Basically from 90, let's say 97 to 112, and pretty solid push through the 110 that was a short-term resistance level. So we weren't saying don't short it blatantly, but we were saying there's a lot of reasons not to. And boom, look at that.
Right, right. And actually, before I left at noon, I said, anybody who did short it, that's fine. You could have made $1 in it, but be very, very careful where you got in, because that was really a kind of a pivot point. So hopefully everybody listened.
So one thing about Netflix, and before we get into like the general recap, this stock trades very well around levels. I mean, if you can identify really significant levels, I mean, look at this. We drew this probably like 4 days ago.
Yeah, I totally agree with you. That's why I love trading Netflix.
Intraday as well as longer term. I mean, if you're not trading it right now and you're watching this video, it might be a little expensive for some people, but maybe you can even jump in there with options or whatnot, to trade those same directional ideas that you like. But it's we kind of joking around about it. I want to say like a month and a half, 2 months ago that it's the new Apple, the new perfect day trading stock, and it's sure living up to the name.
Do you know what? And actually, you brought up a really good point there. Netflix options are very liquid. They are a great alternative to trading $100 stock. It's not always so true in every stock, but Netflix has a really, really good volume.
All right, excellent. By liquid, you mean it's easy to get in and out of a trade, just
Yeah,
in case
yeah,
somebody
there's a
doesn't
lot of
understand it.
volume in them, so you can't. And the bid ask is, is real small, so you don't have these huge, 50-cent bid ask spreads.
And actually, if you look down here too, I'm very, very big on looking at the volume. This is another reason that confirmed why we're a little bit hesitant to talk about being short here, even though it was breaking out to the downside. Look at that volume reversal. Now we pushed immediately into this resistance. Yeah, we got minor resistance here, and then we're looking at 126.
Yeah, it is beautiful. A beautiful chart.
So let's. This is the end of day today, and again, clearly a lot of stuff reversed today, but interesting pockets, right? We've been talking about this guy not being able to find some footing. Amazon, we've been saying, has been between 520 and 539. Hasn't really been able to get out of there. Facebook basically flat, even though it did have a reversal midday today, but basic materials continues to hold the bid. Financials, I don't know, Marion, what do you think? I think they're kind of neutral still. What do you think?
Do you know what? I think financials were holding off to find out what would happen with the Fed. So I'd be curious to see what happens tomorrow.
So XLF caught a little bit of a bid, but again, if you take
really
this thing out,
much.
yeah, just a trading range, but basically a 6 to 7 week trading range.
Yeah, if we want to see those new highs in the S&P, we're going to have to the financials are going to have to join us.
Well, we have energy. We have a few different sectors that are already there,
Right.
but I think you're right. I think the catalysts are absolutely available every day, but it's clear that the big picture of the market before it takes off in a direction is waiting for if we're going to ever do anything with interest rates.
Right.
So here's the end of the day. Yesterday we had a really solid close. Again, getting up to this levels that we were discussing. Actually, you know what? I just threw this in there because yesterday we did a review on a trade in Dollar Tree, but I really want to bring this up just so everybody understands. We mentioned it a lot, having a tracking journal. Yesterday we had Costco to look for a breakout, and it didn't break out. It actually formed an inside day, and we were saying this is why you have a tracking journal from day to day, and that should be the first list that you go to before you run your scans. Whatever software you run your scans. If a stock is in your journal, that means it already meets the criteria, but maybe isn't triggered yet. So this is a phenomenal example, I think, for everybody to print out. Yesterday, it didn't trigger. We said if it gets over this level, which I guess we could point out, Starbucks, same type of thing.
Right.
Yesterday didn't trigger, but if it was in your list, beautiful morning, and then almost $2.50 in the afternoon. I mean, it's just a matter of being prepared. I guess the point that I'm making is you have to track from day to day. And if you're a little frustrated right now, make sure that, you can trade stock specific stuff if the market's not that obvious. There's stuff to do. So, again, put on your overalls and get in there and find this because there's stuff to do in there today.
Right. There definitely was. And I think we were calling it out in the room. We had Home Depot, Lowe's, Costco, Starbucks.
Yeah, we were actually, I think, going through everything like you would do on the weekends, right?
Right, exactly. Right, you actually mentioned.
So we went to Home Depot, and then we went to get a Starbucks, and with Home Depot didn't have what we want, so we went to Lowe's, and actually then we went to McDonald's, and then while we were at McDonald's, we had a Coke, and everything that you do on the weekends was up this week.
Yeah, so. It was just really amazing. And GE gave us a nice trade through 27.
Yep. Excellent call by Robin a couple of days ago. Yeah. And again, helping everybody really understand how to focus your eyes real quick on understanding institutional participation. Everybody should be able to look at this by now and be like 1, 2, 3, 4, 5, 6, 7 days in a row with a green close, which means that institutions supported the buying that day from low to high, and they held it above the open, which is very significant. And you can gather a lot of information just by paying attention to that from day to day. And when you start to see it persistently, that's when you get a gap, and that's when you get a go versus getting a gap without all of that in front of it. So you can see just little trading range here that's not as obvious, gaps out and comes back in. Little trading range here where it is a little more obvious, 4 days of green, and you get some nice follow through. So kind of cool to really dig in, and whether you want to call it tape reading or what whatever name maybe we'll come up with a fancy name and trademark it, but it's just good pure technical analysis. And I think the thing that's important, Mary, is you and I both been trading for a while. No fancy indicators. We're just reading price action. You don't have to make it more complicated than that.
Right. And also, we're really acutely aware of what's going on in the market. So we watch the ticks and the trend, and we did notice that today. And for a while, it looked like the the trend was showing us that the market was really kind of negative, and that was, I'd get mid-morning. But then I think after 11 o'clock, all of a sudden the trend really, all of a sudden we saw it dropping.
Yep, and here's what we're talking about, the trend. The trend actually moves in the reverse direction of the market. So basically we're looking about here up until about 10:30. As the trend rises, that means selling with volumes coming into the market. So the ratio starts to skew. Above 1.2 is bearish. Below 0.8 is bullish, but really the trend of the trend is more important. So up until that point, let's say around 10:30, 11 o'clock, the market actually was pulling back or basically dancing back and forth. That's implying selling. But when that story changed, then the market changed. So it's kind of important to watch both of those. So get a little view of the market there as well, based on the same time frame.
Right, because the market itself will help the stock in going in either direction. A stronger market will help those stocks going up. And if you're selling, you're going to be, you're against resistance.
Yep, and that's actually a good point too for traders making their game plan. We harp all the time on having trades on both sides of the market, even if you're only trading one side. Let's say, for argument's sake, the market's going up today and you're only looking at longs. That's a perfect day. But on a day where the market's not perfect, you could trade some stocks long and some stocks short if the market's not giving you a bias. It's just that there's the perfect day where everything's in sync, and then there's the imperfect day, which is probably 60% of the month. You're able to take advantage of trades on both sides. And then if the market switches midday, then you could stop trading both sides and just go to the side that's in sync with the market. So it's kind of cool. Again, we equate a lot with driving, where you got to make adjustments while you're going. It's not just, hey, I'm driving north and I'm not paying attention to anything. You got to, you can adjust and still get there successfully.
Exactly.
So I guess we'll take a look at the size of the lists. The bullish ideas, again, some of these guys aren't, I would say, showing the strength that we might have expected. Nike is getting a little bit weaker. LB has been pretty strong. Maybe we'll show that one real quick. Get some of these stocks that, you don't normally trade, but when you pull them up in scans, you see them breaking out pretty good. Pull back with the rest of the market midday, but really, really clean breakout here, 52-week breakout. And those are the ones you got to keep an eye out for. Any bullish ideas kind of surprise you today? I guess we got to talk about Twitter, right?
Yeah, Twitter got to that 30 level and got above it. I think we were stalking it, though. You were the one who called out when it looked like the trend was changing in that, and you said, I'm not, it's still a short, but let's see if we've got a change in direction here.
And now we all know that obviously on the way down, you need to have the same thing, significant reference points. 36 was, it danced around, but essentially 36 was the level we were watching for a while. So if we break out, if the 20 crosses over and confirms this change of trend, again, we were talking about higher low, double bottom. Again, if you didn't know the stock, you'd be like, wow, this is bottoming out pretty well. You could actually say that we have a head and shoulders top here. Head and shoulders bottom, right? Shoulder, head, shoulder, we broke now. So 36 would be the first target if you're looking to trade Twitter long, whether a day trade up into that area or a swing trade and hold it for a few days up into the area. That's the true number, the 36.
Right.
I guess we'll discuss our buddy Tesla.
Yeah, Tesla's been a great short.
We had 233 yesterday. Today we had a few more levels. You can see we're drawing levels everywhere just to try and find where is the significant level. And we'll actually going back. The interesting thing about this is normally you can look to the left and say, all right, I can absolutely spot where buyers or sellers did something obvious. We can't see that to the left here. We're basically saying down here is the next level.
Right.
If it stays below this most recent one, but down here is really the most level. So it still has some more room to the side. It might need to consolidate a little bit, Mary. So, it's $40 over this period of time. We might need
I actually think it's
here.
got to make any kind of significant, move down. I think it was going to have to. It's just like when we look at significant moves to the upside. They've got to take a pause and rest.
Yep, very similar to Starbucks now, right?
Yeah.
Beautiful flag up here in front of this quadruple top at 59. Peeked its head through it. Let's see if it stays above there tomorrow. And, actually, if we can just touch on this for a second, Marion, this is the reason it's better to choose one side and not flip-flop on a stock intraday, because this stock is clearly strong in multiple time frames, 52-week highs, it keeps chipping away here. If you come into this day saying, I only want to be long this stock because of the higher time frame, you are not susceptible to shorting here because you think, okay, high, lower, lower high, lower high, below the open. I'm now going to short it. The stock's breaking down. Cross that off. You're not even looking for a spot to short. You see it pull back, or actually, let's go through the trades. You see it bounce. You're buying this flag. Okay, it didn't follow through. Big deal. It's the right trade. Pulls back, holds the open, bounces. All right, doesn't stay there, right? Now you're not getting short. You're looking at one side, and you're able to participate in a move like that. And I think it's very important, especially if a trader is finding their way or having trouble with consistency. Completely eliminate one side of the market in your stocks and just trade that side. If the stock reverses completely, it's perfectly okay. Just let it go, take your loss, and look for the next trade, because over time, you'll participate in more of these when you're on the right side of the right stock.
That is great advice. You won't get chopped up in your trading. You know, you get long because it looks like it's going up, and then it starts to pull back, so you get short, then you get long, and then you just get chopped up and you've lost thousands of dollars.
Yep, and I think it also it makes it easier to look for entries, because now you're not, oh, should I short it and recover it? No, you're in this case, you're only looking for a spot to be a buyer. So now the reference points or the patterns are easy. You're not saying, well, maybe it's a short. Where's the no? You're only looking for a spot to get long. And again, you and I are very open about it. All of the lessons are from our own trading losses. So we went through them already. We paid for the losses. All you guys got to do is see if they make sense for you.
That's right.
So on the other side, actually, maybe we'll call out. I might as well just stay on the chart there, right? We'll look at some stocks that have been bouncing that are interesting. Sina, maybe a little bottoming pattern here, breaking out, and now a little momentum. This is pretty interesting, right?
Yeah.
Still trying to figure out if the casino stocks are short covering or new buying, and woof, what a bottom here.
Yeah, it really was. That's a V in that win.
Yeah, yep.
Look at that.
MPEL held the resistance, LVS up to that same level. So maybe a little bit of consolidation tomorrow, but boy, what a powerful move off the lows. So again, for those of you that aren't familiar, short covering is usually after it is after a downtrend, but usually a fast move up off the lows, and it's shorts getting out of their short, so they have to buy, and that happens quickly. What we're looking for next is if this bounce goes sideways, then that means we have new buying off the lows instead of just short covering, and that's actually a different type of price action to learn. What about on the short side? Anything in particular? I know we've been watching G Pro 2 capitulation days in a row now, yesterday and today. So if I thought it yesterday, I feel even better now. Look at that volume.
Yeah.
So again, we had a couple of people in on the different Facebook groups today calling to bid for it. I'm not saying to bid for it. All we're saying is that the downside appears to be exhausted. There's a big difference between the two. It could be the bottom.
I agree. I think it's got to give you a signal before you could want to buy this.
Yep.
You have plenty of time to get in if this is going to go up.
I agree. Absolutely agree. You don't need to get the bottom. But if you do start to notice stuff like this, and remember, we talked about this about a month ago. We started to see it come down. Look at the difference in the volume. Volume picking up, volume really picking up for almost a month. So this whole month could be accumulation on the way down, and that's textbook. But remember, accumulation is an event. It's not an event. It's not like a one-day thing. It happens over time, and then you see it starting to turn around. So even if it doesn't turn around quickly, just be aware of what that means and track in your own, print your own charts out. See how that looks over time. It's kind of interesting to keep an eye on.
Yeah, I agree.
And I think that's it for today. I think tomorrow, look, I think the Bears are caught short. I think that if they didn't cover today, I don't know what you're waiting for. Reevaluate the trade. I think we're going to get another bullish day, at least on the open tomorrow. I'm not sure if we're going to stay there with how much the market's moved recently. Pretty decent low, but we are coming off of 2 consolidation days in front of resistance. Would technically make this the first good breakout. 150 million shares. By the time that's done, that'll probably be over 160. They're still calculating those numbers. So basically just under 206 is the level. So, we could have one more solid day and push up into there before the weekend. Yeah,
I agree. I think that we have a good chance of having a nice trend day up tomorrow.
Yep, me too. All right, everybody. We had some awesome days. Hope to see you in the room with myself and Marion as soon as possible. If not, you're missing out, baby. We got some good stuff going on in there.
Marion, join us, guys.
Thank you very much. We will speak to you tomorrow.
Okay. Bye. Good night, Pete.
Bye-bye. Good night.